All right, welcome everybody. I'm Ryan. I'm an analyst here. Joined here, we got Ben. He's part of the media team. He's or maybe president, founder, but definitely chief vibe officer.
Yep. Thank you.
You're
Appreciate
welcome.
that.
That's a real title.
Yeah, it's a real title. It's on the contract.
It's on the
Chief
contract.
Vibes Officer.
What'd you have to do to get that contract?
Just curate vibes.
Okay. I don't know why.
Never-ending job.
That's pretty good. We're just gonna honestly just have a conversation. We're gonna do something a little bit more podcast style here, and just kind of relax, vibe out with our chief vibe officer here.
Yeah, we're gonna try to keep it chill, keep it simple, and just kind of talk through some simpler things that sometimes we may get ahead of ourselves. You know, here you just assume everybody knows everything, right? But just tone it back.
We know nothing.
Well, yeah, besides that, but just tone it back, keep it simple. Try to meet people at every level they're at, because investing is a journey. You can't just hop right in, right? So,
wow, that's some good life advice too.
Thanks. It's also a life advice podcast / TV shows.
All right, let's get into this.
Yeah, I mean, so for my first question, as an average Joe, as a rookie investor,
Okay.
what are some common mistakes that you see average Joes making when they first start investing? So
Okay.
like when you're first getting into it.
Okay. I think the biggest mistake is, I think there's three folds of mistakes here. I think one thing is you just have to start. Okay. I'll go into more detail on each one of these. I think the second thing is they overthink it a lot. And the third one is they don't put enough money in, or they're just too scared. Those are the three big things. So first on the just start, right? I feel like people just trying to overthink it, be the smart guy, right? Because there's so much research out there.
There really is.
And it's kind of overwhelming because
endless amounts, literally, of financial research.
Yeah,
it's crazy.
It is insane. Don't tell anybody, but I don't even read all the research that we put out.
We put out a lot too.
Right.
Biased the best, but
right, but I can't even. I don't have enough time in the day to read all of it, right? And imagine if you're just an average Joe and you have the whole internet, and you're like, okay, which one's good, which one's bad? What do I do?
You're on Twitter, you're on Reddit.
Yeah, and then
who's trustworthy? Anonymous names giving you financial advice,
avatars.
Right.
Sometimes I don't even have names. Right, but then you go down the rabbit hole and you're like, okay, I got this. I figured it out. I read 20 articles. I'm a genius now. Yeah. And you're like, I'm the smartest person in the world. Yeah. And you're trying to go in and out of stocks and time things.
Right.
And it ends awfully because
every time.
You don't know what you're doing.
Nope. You can't. You can't. Reading 20 articles does not give you the ability to time the market.
At all.
I'll tell you that right now.
I mean, I could read 20 articles and still not time the
exactly.
market. I mean, kind of the best thing is, I don't know, I think their stats, I don't know what the exact stat is, but most advisors or portfolio managers, they don't beat the S&P 500.
Yeah.
Okay, so first off, S&P 500 is just what the market is, almost the stock market essentially in the U.S.
The total stock market.
Yeah,
that's right.
Right. It's basically if you're doing better than that, you're doing really good, and if you're doing worse than that, well, you might as well have just been in the S&P 500. Essentially, what the S&P 500 is right there. And so most people that get paid to do this for a living, I don't know what the stat is, it might be 50 to 60% of them do not beat the S&P 500,
which is crazy.
So your full-time job, and you can't beat it.
And you sit there and think you can.
And then you're an average Joe and you think you can, right? And the reality is you probably can't, which is fair.
Right? Yeah, which is totally fine. People's job to do it and they can't do it. So
right. Imagine
don't feel bad. Don't feel bad. Don't get discouraged. That's the biggest thing.
Right. But that's the whole thing is okay, you're overthinking and thinking you can do it, but also, right, here's also the thing, right? An advisor who's supposed to be beating the market. I've actually, my friend, he went to some advisor, and
can't name names.
Cannot name names. He did not listen to me. I said, hey, just put your money in the S&P 500.
Yeah.
Literally, right?
It's cruise control to do that,
Correct. That's I'm just put in the S&P 500. You're gonna go to an advisor, and he's not gonna do anything special for you.
Nope.
90% of them don't do anything special. Now there's a good 10%, but 90% of them aren't doing anything special.
Right.
They're literally just matching the S&P 500. Now, here's the biggest...
If they can.
If they can, which they most likely can.
Sometimes they can't.
Here's the biggest kicker. They take a fee every single year.
Yeah.
The fee is like 2 to 3% of your money.
Yeah.
Every single year.
Which can be a lot if you have a lot of money in with them.
Could be a lot, or if you don't have a lot of money, like why would you want to give 2 to 3% of your money away?
Right.
When you can just go into the S&P 500 and they only take 0.09% of your money every year.
Right. And then and then there's some that take less, and there's some that take 0% of your money every year. Doesn't track it nearly as well as the S&P 500, but it's the same sort of thing. So anyways, it goes to your point where you don't need to pay.
You don't need to pay the 2 to 3% for somebody who's not going to beat the market anyway.
Yeah.
That
seems like common sense to me.
Well, I don't think it is common sense because like the rabbit hole and like it.
True.
I think it's pretty hard to like kind of come to that understanding that like most people can't beat the market. Why try to, but like also just like I think it's just like I think people have the wrong idea about the stock market actually.
Well, here's what I think. Also, a lot of people come into it looking for like, oh, I'm gonna pick this stock. I'm gonna put a ton of money into it and like an option, say.
Yeah.
It's just like sort of leveraging your bet.
Yeah.
And then they're like, I'm just gonna get rich.
Yes.
Because the thing a lot of people see that goes viral is people making tons of money off one trade in the stock market, which, like, sorry, but it probably won't happen to you unless you have inside information, which is, by the way, illegal. So, so a lot of people come into it with these grand expectations of becoming rich, like immediately, overnight, like as they think they are hearing, what appears to be reality. But at the end of the day, it's more just about a long-term compounding of your money. And that's what they don't understand. So it goes exactly to your point. They don't really fully understand investing.
That was exactly where I was going.
Yeah.
That was exactly where I was going.
Yeah.
It's right. It's the wrong concept. They think stock market equals I'm going to get rich.
Right.
Quick.
Is
very quick. And the answer is no.
That's the wrong idea.
It's really the wrong idea. Actually what the market does is holding the value of your money.
Yeah.
That's really all it is.
Yeah.
And for the most part.
Yeah.
And like you said, yes, some people do like
very occasionally.
But like you're only hearing about that one person because it's literally just one person, 1 to 2 people. Like it's less than 1% of the people. Like
way less. I mean, everybody's got their money in the market pretty much. Like you're hearing about one person.
Yeah.
Who's I mean, I don't know. It's just anomalies. Yeah, so you can't bet on an anomaly.
Well, honestly, most of the like your boomers, what they did was back in the 2000s, they invested in let's say Apple or Amazon, and it went up like a poop ton, and or a shit ton.
Yeah.
Oh.
Is this a cursing podcast?
I think we can curse.
Ethan?
Yeah, Ethan says yes. That's our producer,
yes.
Ethan. He's the man. He said yes.
I do whatever Ethan says.
Life. Ethan is life. But anyway, right. So what they did was they waited for a market crash and they just held Amazon for 60 to 50 years, and now all of a sudden it's worth a lot of money.
Yeah.
That's all they did. They
didn't happen overnight.
They did not trade it. They didn't do anything. They just
if you traded it, you have potential to actually make less.
Yes.
Because you could have missed. So
yes.
Yeah. What you're getting at, I think.
Yes. Right. It's a way to hold the value of your money. Right. Yep. Right. So like if you have a savings account, right. So let's say you have $100 in your savings account. In a typical savings, you earn about less than 1% of that every year. So like you get basically a penny every year for having a savings. Now we know basically there's something called inflation, which is like the value of goods go up, right? So the value of like, I don't know, eggs at the supermarket goes up by X%. Okay. All the stock market is really doing is you put that $100 in the stock market, and now as the price of eggs goes up, your
money hopefully beats it.
Your money hopefully, and if eggs go up by, I don't know, 8%, hopefully your money went up by 10% in the stock market. So now you hold that value of everything you put in.
Right. If you don't, by the way, if you don't do this, if you don't invest, inflation will happen every year, and you will actually just be worse off.
Yes, you will be losing money.
You will be literally losing money every year.
Literally be losing money
if you're not in the market.
Exactly.
Yeah.
So that's why, right? Number one is right. You should just start because you you need to hold value of your money. That is a really important thing when inflation is what it is.
I mean, especially if you add up the rise of inflation over like 10, 20, 30 years, like you could be losing
a lot
a lot of money that you could have had if not made over that same amount of time. So it's like the best time to start is now, and it's very easy.
Yes, it is very easy. You can kind of people can look that one up, but then it's doing too little, right? So I think the biggest problem is maybe in all of the Americas.
All of the Americas.
I'm just talking about the USA.
North and South?
No, I'm just going North
Central?
America. US.
Yes.
I think US is the Americas, but
it's the America.
It's
the America I think of.
It's America I think of.
When you say America, I don't think of the continent of South America.
Yeah, I know. I think some people
think of the lower 48. Sometimes I forget Alaska and Hawaii. To be fair, sorry guys.
Sorry.
Anyways.
Well, honestly, yeah, but I think about Alaska a lot. I want to get out to Alaska.
I've been there. It's great.
What?
It's sick.
What? When? How?
In high school, visited one of my friends out there, and we went commercial fishing for 2 days for halibut, and then we shot some guns.
Jeez.
Yeah, it's cool.
How long were you out there?
Just about 2 weeks.
Fuck.
Yeah. Great time.
Did you catch halibut?
We caught 60.
60?
Yeah. Over 2 days.
Or like big fish?
Yeah, big. It looks like a flounder. Like big. Like this big.
Holy shit.
And they're flat.
What?
With 2 eyes on one side of them.
They're bottom feeders. Wait, that's what a halibut is?
Yeah.
Oh my god, I eat halibut all the time. Never knew what it was.
Good. I love halibut.
Damn, were you on like that all those like stretches of islands in Alaska, or?
I think we were sort of the Aleutian chain. I think we were in Homer.
Homer.
So I don't know exactly where it is, but it might be somewhere near that.
Homer. I don't know.
Homer, Alaska.
Oh.
You guys can look that one up.
Homer, Alaska. Well, does your buddy have a little like hut for me or no?
He's got a house. They live there.
What? I want to live in his hut. I want to live in his house. I mean,
you could live in his house. He's a good guy.
He's a good guy.
Yeah.
Well, I want to be out there for like a month.
Okay. He's got a hut.
He's got a hut.
He can build you a hut.
Now that's the Alaskan way.
I bet he could.
Well, they have like the nicest mountains. They have like the nicest everything. I think
it's incredible.
So,
yeah, it's great. You should get out there.
I'll work on it. Yeah, so it's the lower. I have lower 48 and a little bit of that upper 48 in my mind.
Good.
A lot.
You're keeping an open mind.
Maybe not to South America.
Sort of like our go anywhere process. We cover the globe. Not only the Americas, we cover the globe. Anyway, that's besides the point. What sort of relates is that the S&P is America's top 500 companies, so you're invested in. I think the biggest market in the world, right, is America.
Yeah, it is by a long shot. Okay. I mean, the Googles will tell us how big it is, but
the Googles. But we have the biggest companies.
Yeah, no. So. It's the largest stock market. It's the one that everybody pays attention to.
So once again, we're S&P 500 salesmen, and you should invest in it now. If you don't know what you're doing, that's what you do. That's what you do.
Bringing this full circle here.
Thank you.
Basically, the last point was like putting in like too little, not enough money.
Yeah, I want to hear about this one.
So, because what we do wrong, I think, in the U.S., the Americas, well, it's we just spend all of our money. I think that's like one of our consumerism. Like it is a huge thing, but
it's a huge thing.
Yeah, and so like
guilty. Honestly.
Yeah. Oh my God, having a fiance really screwed me over on that one.
Oh, I bet.
Oh, she spends everything.
Well, you did sign up for it.
I did. I knew that was in the contract. Yeah. And so essentially what happens is, right, here's what I did, right? When I was like
a young Ryan.
I'm still a young buck, right? Was just, I would only have in like a checking account, like, back in the day when it was like, it was only $100.
Yeah.
Right? Like
just
$100.
What you needed to spend.
Literally $100 over what I needed to spend. Mm-hmm. Right?
Yeah.
Maybe you can go up to like some people get scared about that. Like, oh, $100. What if anything wrong goes happen? Okay, put $1,000 above what you need to spend. But then after you spend at the end of the month or after every paycheck, whatever it is, all of that money should be going towards a brokerage account.
Yeah.
That's what I personally believe. That like you just need to get it out into
In a
the market.
brokerage account.
A brokerage account is
Not-
basically where you can invest in the S&P 500.
So just quick question for me. Over putting it in like a retirement account or like a high yield savings, you would put it in brokerage.
Well,
Over all of that, or
yeah. I mean, because a brokerage account, you can get like anything. But
Yeah, I know
you
what you're
can
saying.
get a high yield savings with that. You can get the S&P 500. You can do all of that. Basically, I say a brokerage account just because like what I was doing was literally I was putting that money in the S&P 500 essentially. Like
Yeah.
every single month,
Yeah.
I got money.
Yeah.
I took out what I didn't need, and then I put it out there because then I couldn't spend it.
Yeah.
Like I couldn't.
You couldn't. You had
I
to limit yourself.
literally couldn't spend because like the money was not in the checking. When you don't see it in the checking,
You're like,
I don't have any money. I'm a broke person, right? So out of sight, out of mind. But meanwhile, your money is making money because it's in the S&P 500.
Just a quick tangent. You obviously max your Roth contribution every year, so you need to like allocate to that, or is that not even as important really if you're if you're just starting?
I think if you're beginning to invest, the
just
important
S&P.
part is just getting it in to an like just
Something that it's going to grow in.
something that's gonna grow.
Okay.
So I like an ETF is SPY, which is S&P 500. Like to me, it's that like right goes back to don't overthink it. Right, like just start getting it in. Like have your money grow, and then once maybe in a year, you know what. You want to figure out like Roth IRA, all that, like go figure that out. But like for just to start, like just make sure that money's working for you.
Yeah. So you would say you just get it in the brokerage because well, in Fidelity there's like the 5% SPAX thing, which is actually like basically a high yield savings in itself.
Yes.
So you would say that over like this is just for me. I want to know because
Yeah.
I try to bounce between all three, and like I get kind of confused on like how much should be going in each. You think you just go broke, like you max the Roth, then you just go everything else brokerage, it's like extra money basically for the month.
Yeah.
Yeah.
Yeah. I just keep it simple. I mean, my philosophy was I am like super young. I have a job, so that's good.
That's good.
Right.
Congrats.
And if like
You still do. Look at you.
I know it's pretty nice.
Incredible. Who hired you and who kept you on? It's crazy.
Honestly, that was a question and a half. Who hired me? I don't know. But anyway, yeah, I would just kind of keep it simple and just like I went S&P 500.
Keep it in one place.
I just kept going S&P 500 for everything.
Love it.
And now what happened was essentially I woke up like pretty much 2 years later after doing this. I'm like, oh, there's actually
Way
something
more
there.
money, yeah.
There's actually something there,
at
and
that.
it continued to grow.
It's incredible.
It was great. But if you want to diversify, like,
Do like a total market or something, you know.
I mean, yeah. So like, essentially,
You don't need
a savings account, like 100% no. Like if you like still have like, there's like a checkings and savings at Chase Bank or whatever bank you have.
Yeah.
Like that savings, like no.
Like a 4% yield or whatever. Just
No,
don't even do that.
No. Like that savings account, that's the thing. Most people don't know that. Like the savings account in like a Chase Bank only gets you less than 1%.
Oh really? Oh well, I'm more saying like, for example, like a Goldman Sachs Marcus, like high yield.
Right. So that's like a step above the average Joe right there. Okay. So like
So
average.
let's bring me back down to earth.
Yeah,
Sorry,
we're bringing you
everyone.
back down
Sorry,
here.
guys. Yeah. Who would thought me of all people would be getting to?
But then yes, as you're saying, then you can go like in a brokerage account. Basically, what you can get is basically a risk-free rate
Yeah.
at 5%.
Yeah.
So that's what you're saying.
Yeah.
I would 100% instantly turn that savings account into that.
Yeah.
Like if you're
Right
like
away.
oh my God, stocks scaring me, like you should at least be doing that. Because if not, like I don't know what you're doing.
And then it's already in the right place if you did want to buy SPY.
Correct. Get in the right spot now. Personally, I'm not gonna like give like percentages, but I would say SPY, QQQ is another good one. That's like tech, so that's just more volatility, right? It all depends on how much volatility you want in your account.
Yeah.
Essentially, so SPY is like the neutral amount. QQQ is more volatile. So you can get more return, but you can also lose more.
Yep.
And then Bitcoin is out even further, and that's like you can risk even more and lose even
Yeah,
more.
you could buy a Bugatti, or you can end up on the street
Exactly.
overnight.
Well, we're trying not to get
No,
people
I'm
rich
kidding. I'm
over,
kidding, guys.
right? Or there's other things that are like it's HIGH. So this is an extra high yield savings account. So this, instead of getting 5%, it gets you 9%.
What's the drawback?
Okay, so these you have to be very careful with. But I did the research on this one, so I'll talk about this one only.
Okay.
This is not a pitch for me. They do not pay me one single penny, which kind of stinks.
They should.
Thank you, everybody.
Let's reach out.
Yeah, reach out. Oh, you know what? Let's see. What are things I like? I mean, I Liquid IV.
Yeah.
I love Liquid IV because I get a lot of hangovers, and that keeps me going.
Gonna get one today. Woo! Tomorrow.
No, I had. Oh, yeah.
What did you do yesterday?
Yesterday. No, well, I had one before this. No, there's like energy pouches, and that's why I like ran a marathon on. Were these like Liquid IV energy
the
pouches?
little, yeah.
Yeah, they have like little electric like lightning bolts on it.
Okay, I'll look for those.
Yeah, no,
Nice.
they're better than coffee. I think.
Really?
Like I'm wired right now, and I was up at 3 a.m. Like it's good. Anyway.
You're a machine. Continue.
Anyway, so yeah, HIGH basically gets you 9%. What they do is most of the money is in those 5% vehicles. So like 98% of the money is. And then what they're this gets way too complicated.
Yeah, maybe we.
They have options essentially.
Sure. Yeah.
And
it's
they
a
have options on the
leverage.
market, and they get extra income from those.
Okay.
But it's a very small percentage of the total portfolio, so there's not a lot of movement in the price. So anyway,
Interesting. That's cool.
yeah, it's pretty cool.
That is cool. That's genius.
And so like if you're a new person, like you can kind of like
You could sample it.
just sample them all out.
See what you like. It is really to each his own, right?
It really is.
You're totally okay putting it in the 5%. You're probably better off putting it in SPY.
Exactly.
You may or may not be better off putting in something else. Like, there's volatility, like you said. So the most important thing is just getting active, because then you'll start to get exposed to
Things you never thought you'd get exposed to.
yeah, and it's just beneficial. You're just gonna learn more. You're gonna become more comfortable.
Exactly.
It'll stop you from spending as much, like you said. There's a lot of
Exactly.
benefits.
Stop you from spending, and then once you stop spending, you're making a lot more. I mean, also the part I didn't really mention was like debt. So like your student debt.
Mm-hmm.
That's a big killer for us.
Yep. You gotta make sure that goes away as soon as you can.
Right. So the way I think of it is there's two different debts, right? And for students, it's your public debt, which is the government debt. Those have an interest rate of like 4%, okay? Then there's maybe 5%, I don't know what it is now. And then there's private debt.
Yeah.
Those have an interest rate of like 9%.
Yeah.
Okay. So basically, if you don't know what interest on that is, it's essentially if you're going to have to pay more than you took out. That's
As time goes on.
as time goes on, and like you're paying it over like 20 years.
Yeah.
Which is for 20 years, you have a $400 payment every single month,
Brutal.
essentially.
Yeah.
It is. You cannot really compound money when you have to pay for debt.
Yeah.
Essentially.
Yeah.
So here's kind of the key is or how I think of it. Every time I paid off the 9% loans first, right? Because essentially those 9% is bigger than 4%.
Yeah.
And so that's going to hurt me the most in the long run, essentially. So the way I thought of it was, so if I had an extra $500 over what I typically had to pay, so like typically I pay $400, but I had $500 left over in my account, in my checking account.
Yeah.
I basically took that 400 and paid off the extra on the loan.
Yeah.
Okay, so
I know what you're saying.
okay, and so but I paid the 9% loan off first, and the way I thought of it was every single time I did that, the extra 500, I felt like I made 9%. That's why I just convinced myself. Whether or
Nice.
not the
Nice.
math works,
Nice.
it doesn't work, but
It's just a little incentive for you.
it makes you think, oh, I just made a 9% guaranteed return without even doing anything.
Yeah.
And 9% return is quite good.
Yes.
So that's where I was
It
like,
beats the market average
yeah, exactly.
over like what?
over, I don't know,
Historical,
20
yeah,
years. Yeah, it beats the S&P 500 or
Yes.
SPY over.
That's
That's
what I mean.
basically what the SPY gets you every year.
yeah.
Right. And so
Look at you
right. But that's like part of,
finding a new way to,
Uh,
beat inflator.
well,
Or just
no.
like-
Well, basically what you're doing is right. I'm guaranteeing a return.
Yep.
Technically. And so when you're guaranteeing a return, like now I don't have, my payment isn't $400 anymore. It's more like 150.
Yeah.
So now I have $350 extra dollars every single month,
Nice.
and that 350 goes straight into S&P 500 instead of paying off of a debt.
That's boy math right there. That's boy math.
And that's how you compound money.
Look at that. Boom.
That's how you compound money.
That's smart. I
Yeah.
love it. I love
Yeah.
it. Little incentive hack.
It was a definite incentive hack.
Yeah, but like so I mean you gotta get the debt out.
Out of the way.
You gotta get it out of the way.
You gotta get it out of the way, otherwise it's gonna like basically cripple you the rest of your life.
I mean, yeah, it just gets worse and worse as time goes on.
Right.
So
Right, because you can't compound money. What,
No.
you're supposed to have a rent payment,
right. Student loan payment.
Already you're at, like, the student loan payment could be half your rent payment.
Oh yeah.
I mean, then you have to pay for car insurance,
Oh jeez. Like there's just endless things. Groceries, like
groceries.
internet. I'm sure you want internet in your house. Like
You definitely need.
there's a
internet
million things.
nowadays,
Subscription. Like everybody needs Netflix, of course.
right? Nah, I don't pay for Netflix. Dude,
Where do you get your Netflix though? I know you have some backdoor way into Netflix.
Well, I take my parents, but it's actually not. And like, I just moved. You know how Netflix
So it
kind of like
doesn't work.
messed up with all the passwords.
Yeah.
I don't know the password to get in anymore.
Ah.
So I like kind of don't have Netflix.
You're not missing anything.
No, it's not good right now.
No.
I mean, I need to get my updates on like the Ozark, like,
Netflix is your update.
yeah.
On what? On like pop
Hopefully
culture?
no, like Ozark, like
Oh, Ozark. Oh,
Like, you know,
I don't
like,
even watch
popular
that.
shows.
Yeah, no, I haven't watched that one. That's on me. I've been watching House of the Dragon. So
what is that?
Game of Thrones prequel.
Oh,
Yeah, solid show.
really?
Big fan.
I have not.
You haven't done Game of Thrones?
I have not endeavored into the Game of Thrones.
It's incredible.
Is it?
It's the best show
Yeah, but here's
I've
what I
ever
heard.
seen.
It fell off on the last season, so like, why
Yeah,
would I
sure,
invest
but,
any
like,
time?
It's so worth it to watch the first 7.
Yeah, but okay, what is it on? That's
HBO.
so now I gotta go pay for HBO.
I mean, yeah.
Yeah, so this is
Yeah.
the issue.
Yeah.
I'm not paying for
You
it.
probably do. Or like you could like buy each season. Doesn't matter.
You can buy each season.
This is bad finance advice. Telling you to go telling you to go spend your money. Don't do that. Put it in SPY. Yeah.
We need a slogan actually, like right here.
Yeah. Put it in SPY. That's it. You should just put that up on the wall.
I can't come up with a good rhyme. What rhymes with spy?
Who's SPY?
Buy, rye, lie. Don't lie. Put it in spy. No.
Don't be shy.
Don't be shy. Put it in spy.
Boom.
Oh, let's go.
Mic drop.
Right.